Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Friday, July 25th, and we're in the middle of the U.S. session. The U.S. dollar was strong this week. Jobless claims came in at a 10-year low and provided fuel for the greenback. The market is also pricing in the relatively strong second quarter data so far as impetus for the FOMC to consider a rate hike before mid-2015. The FOMC will be releasing its monetary policy next Wednesday, followed by non-farm payroll on Friday. Let's take a look at the US dollar index, dollar yen, euro dollar, and the pound dollar before a very key week in US fundamentals. The US dollar index cracked 81 today and looks poised to test the 2014 highs around 81.35. Next week, if the FOMC does hint at a rate hike before mid-2015, we should expect it to push towards 81.50 near the November 2013 high. Notice that a break above this level would essentially put the US dollar index in a double bottom and signals a long-term bullish outlook, though in the short term we might be due for some retracement, seeing that the RSI is above 70, showing overbought condition. The dollar yen was bullish this week, but is still contained in the falling channel seen in this 4-hour chart. Next week's fundamentals should help it decide whether or not to stay in the channel or break out. The thing is, a break above the channel is still within the context of a descending triangle in the daily chart. A break above 102.50 might break this triangle and introduce a bullish outlook. Otherwise, the pressure remains towards July's lows around 101.10 down to 2014 lows around 100.75. Another level to monitor, looking at the 4-hour chart, is the 101.50 area and this week's rising trend line. If price comes down but fails to clear below this area, the bearish outlook weakens. The euro dollar ended the week pressing at new lows. The next key support level is around 1.3295 to 1.33, the November 2013 lows. Before that, we might be due for a correction, seeing that the daily RSI has dipped below 30, which shows oversold condition. The first key resistance, so if we get a pullback, the first key resistance will be in the 1.35-1.3515 area, which was June's support and could be reinforced by this falling trend line. The next key resistance will be in the 1.3570 to 80 area, which was the support or neckline of a previous head and shoulders pattern. You can see that in the 4-hour chart. Okay, so if price comes back up to these levels, watch out for sellers with the downside risk toward 1.33. The pound dollar has fallen below 1.70 this week. The strong US dollar is coupled with a soft British pound. The Bank of England meeting minutes showed some concerns about the lack of wage growth, and this might prevent a rate hike in 2014. We might be able to expect at least some near-term bearish outlook, but we should limit that outlook because of the prevailing bullish trend, which still looks healthy, at least until a strong bearish signal. In fact, watch out for buyers when cable approaches 1.6920, this pivot here, support resistance pivot, as well as the rising trend line. A break below 1.69 could trigger some further bearish correction. At that point, traders might be considering selling on rallies. But for now, we should still have a bullish outlook for pound dollar, looking for buyers around 1.6920. And that wraps it up for today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you a great weekend.